Hey, it's Mike Hambright from FlipNerd.com. Welcome back for another exciting flip show. Today I have with me Jilliene Helman, who is the CEO of RealtyMogul.com, which is a crowdsourcing platform for real estate investors. It's a real hot area right now, an exciting topic, because a lot of real estate investors are always looking for new sources of funding. Before we get started with Jilliene, let's take a second to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Jilliene, welcome to the show.
Thanks for having me, Mike.
Yeah, and I understand you're a little bit under the weather, so we'll say pardon us for everybody if you sound like you're a little stuffy, but hope you feel better.
Oh, thanks. Appreciate it.
I'm glad you're a trooper to not cancel. That's awesome. So, you're in a really hot area right now. The crowdfunding is in a very interesting area right now for real estate investors, and I'm excited to kind of learn more about what you guys are doing at RealtyMogul. But why don't you kind of introduce yourself first and talk about your background and kind of how you got to this point?
Sure. So I came out of a big banking background, big bureaucratic $90 billion bank. I was working predominantly in wealth management. So working with our high net worth clients, individuals, endowments, nonprofits to invest their capital. A lot of these folks were investing in stocks. A lot of them were investing in bonds, but I grew up in a real estate family. So my grandfather was a developer. My mother and father always owned real estate. And I really learned kind of my real estate chops around the dinner table. And in April of 2012, Congress first approved the Jobs Act. And it's the first time in 80 years that the securities laws have changed to allow for a couple of things. One is advertising securities. So whether it's real estate securities or other securities, it gives us the ability to advertise. And two is this concept of crowdfunding. So opening up the capital markets to a broader scope of individuals. And I saw this political shift happening at the Senate level, at the congressional level. And I just said to myself, there's always an opportunity when there's a political shift. And I went to my co-founder who runs our technology and our product group, and I said, hey, we've got a great opportunity here. We can open up real estate investing to a broader market. Let's take real estate finance to the internet. And that's what we did. So we started about a year and a half ago now. I left my job in big corporate banking bureaucracy, and we've gone, building our own business ever since.
That's awesome. And so talk a little bit about kind of how you're structured. I know I know some other crowdfunding folks, and they only do single family homes, but I know you do some larger commercial stuff and some other things. So talk a little bit about, you effectively have two customers, right? You have those that are potential lenders, and then you have those that are the borrowers that are doing deals. Is that right?
Right, exactly. Yeah. And, first of all, crowdfunding at its core is pooling capital together. Right. So we've built an online marketplace at RealtyMogul.com for these investors or lenders to get access to real estate transactions they historically would not have had access to. And then beyond that, we are working with a number of borrowers who need access to capital. And, our main goal for these borrowers is to give them really, really fast access to capital and to make the process really painless. So we've taken, all the good stuff that your private lenders make you send stuff in and fax stuff and email, and built an online mechanism of ingesting all that data and making the process really simple. We're both residential and commercial. So we do residential loans, so single family loans. We're happy to be kind of somewhere in between a private lender and a hard money lender. Yeah. And then we also do commercial loans. So we'll lend on apartment buildings, we'll lend on retail shopping centers, we'll lend on self-storage facilities, in addition to 1, 2, 3, 4 unit properties. Okay.
So for those folks that are prospective lenders that will lend money into these pools, what does that person look like? What is the ideal prospective lender from your standpoint?
So it's interesting. We've, I think, got the biggest database in the country of lenders or prospective lenders, and they really range. So we've got kind of three buckets of lenders. Bucket one is high tech. Bucket two is finance and real estate. And bucket three is professional. So let me dive a little bit deeper there. In bucket one, we've got a whole host of lenders who are really comfortable with technology. These are senior software engineers at Google. They're product managers at Facebook. They work at Yahoo. And these big tech companies, they may have never lent against a real estate loan in their lives. This may be their first, exposure to it because they've never had access. And our marketplace is really about opening up that access. So that's kind of the tech bucket. Bucket two, people who are in finance and real estate. These folks tend to be very sophisticated. They've made loans against real estate in the past, and they're looking for deal flow. So they come to RealtyMogul.com to get access to more deal flow. And bucket three are professionals, attorneys, CPAs. These are folks who are sophisticated. They're high net worth, so they make a decent amount of money, but they just don't have an easy, fast way to get access to real estate loans, and they use RealtyMogul for that.
Yeah. And can you say, I know it differs quite a bit, but how is the rate determined? Is that supply and demand that's determining that, or is it something that the borrower comes in and says, this is the amount I'm willing to pay, or the other way around? Kind of talk about how that happens.
So my thought process around rate and around what you're charging in any market is risk and return. So we have a tiered pricing system. It depends on the borrower. So how strong is the borrower? What's their credit score? How many transactions have they done historically? It also depends on the market.
And I want to talk about the actual borrowers in a second. But what is the typical, if it was a very low risk deal, relatively speaking, what kind of return would an investor, a lender, expect to make?
So our lenders are probably making between 8 and 10%, depending on the transaction.
Okay. And what about, is there, maybe there's not a limit on the riskiest of your loans? I'm sure that if they're super risky, you're probably not doing the deals, but at the other end of the spectrum, what type of rates are folks typically receiving?
So you're right. It totally depends on the riskiness of the deal and on the structure of the deal. But we're usually making a point or two in between. So it could be 9 to 12%, 9 to 14%, depending on how high that risk profile is.
Okay.
It also depends on the market, right? There are some markets that you have really, really small single family homes. So if you're doing a $20,000 or a $40,000 loan compared to putting out a $400,000 loan, the pricing is going to be different just because it's in some respects the same amount of work to do a small loan as it is to do a bigger loan.
Right. And then talk about, I guess, from the borrower side, how do they? Because you said you're kind of between a private lender and a hard money lender, mm-hmm. And how do what from a borrower's perspective? Why do they use RealtyMogul versus one of those other two things? Is it because it's better rates than hard money? Is it because of ease of use? Or kind of talk about some of the benefits that borrowers would get.
Yeah, so really what we pride ourselves on for borrowers is three things. Number one is speed. We are fast and we believe in efficient processes. So, first and foremost, we are a financial services company, but second of all, we are a technology company. And we use technology. We have a multi-million-dollar budget this year in technology. I don't think there's another hard money lender in the country that can say that to you. Yeah. And we're not strictly a hard money lender, but we really believe in technology. And what that technology allows us to do is number one, speed. Number two is user experience and ease of use. Mm-hmm. We're trying to make the experience a wonderful, wonderful experience for our borrowers. So I know lots and lots of borrowers who've said, my experience with my lender is just miserable. I don't know where I am in the process. I don't know what documents they need. I don't know if I'm funding. I don't know if I'm not funding. I can't sleep at night because I don't know if we're actually closing. So that whole, feeling around that, we're really trying to change. Yeah. And then the third one is related to speed and user experience, which is, certainty of close. When we say to a borrower, we are closing, we are going to provide this loan to you, irrespective of if our lenders fund or not, we're making that loan. So it's really about user experience, and it's repeat. one of the beauties of having this online technical system is that we don't ask borrowers for the same information twice. If you've given us the information, we've stored it, it's in our system, I'm never going to ask you for that again unless there's a change. Yeah. Your other lenders, they're going to ask you to fill out the same form every time. There's no easy button to just say, rinse and repeat.
Right.
So we're really in the business of let's find great borrowers, let's give them great user experience, and let's rinse and repeat.
Yeah. Yeah, I think the traditional mortgage industry needs all three of those things that you just talked about as well. Because, I'm a real estate investor myself. I sell a lot of houses, and boy, it's a miserable process every time.
Yeah. Yeah.
So, yeah. Well, and so talk about, you said speed. So talk a little bit about speed. I know I'm sure there's a process where users have to become a member and go through maybe a background check, or they check on the deals or whatever. But talk a little bit about the timing of from the time that somebody that already is a member brings a deal to you, what the timing and the process looks like.
So it depends if it's residential or commercial, but let's focus on residential maybe, because I think a lot of the listeners are in the residential business. We can close rapidly. We can close in 5 days or less. Wow. It's really dependent on the borrower in a lot of respects. I mean, we obviously do need information from the borrower. We try and make it as streamlined and simple as possible. But our Express program, if we've got all that information from the date that we have all the information, we can shoot for 5 days or less. So it might be a 10-day total process. And it's really because we've built systems and we've built process in order to be able to give the borrower that kind of experience.
Yeah, that's great. And do you do for single family home investors? Do you do 100% of, if it was purchased right, are you doing 100% of purchase and repairs potentially if the deal was purchased right? Or?
We can, depending on the market. In a tier 1 market, we're going to be more comfortable than in a tier 3 market. We've got guidelines and we've got credit underwriting guidelines, but it really depends on the borrower. It depends on the market. It depends on the speed of close. So we kind of mix and mingle those 4 aspects that I talked about earlier.
Okay.
And we want to make sure that we know what the value is, right? So we're doing internal valuations, we're doing external valuations. In certain circumstances we can, but I think that, it should only be expected if it's a rock solid borrower in a tier 1 market, with a fantastic track record in history.
Yeah. Yeah. That's great though. It sounds like everything you've said should be music to a lot of real estate investors' ears. So
we hope so.
Yeah. Yeah. So talk a little bit about from the business side of your business, where you're at and where you see things going from here, and really kind of just generally the whole lending space. Technology is really enabling everything you're doing and a lot of other things in terms of lending and making markets that didn't exist before. Just talk a little bit about where you and RealtyMogul are going in the years to come, I guess.
Yeah, so we've been in business about a year and a half now. We funded about $150 million in real property value. We're active in a variety of states. We've been active in 16 states to date. I think that we'll be, largely national by the end of the year. We just received another $9 million in operating capital. So we've raised $9 million for our own operations in order to invest in technology, invest in people, invest in process. And it's only going to grow from here. I can see us doing hundreds of millions of dollars in loan originations for real estate investors. Our core bread and butter is all non-owner occupied. So we're not doing any owner occupied in mortgages. It's all non-owner occupied. We are a partner to real estate investors. Yeah. And I think that you'll see our volumes, skyrocket. And while you'll see volume skyrocket, I also think that you'll see us hold very steadfast to quality. Credit quality is important to us. Half of our business is working with borrowers, half of our business is working with lenders, and those lenders expect high credit quality, or they expect to know and understand those risk profiles. Yeah. So we're building out a lot of risk profiles. We're working very, very closely with borrowers and lenders, but it's streamlined process. Our whole company can tell you that every day I'm saying, how can we make that process better? How can we throw away our current process and make it more streamlined? That's just so core to our culture here.
Yeah. What's interesting is I just heard a statistic that somebody else gave. It was higher than what I thought, but that what they said was 40% of single-family home purchases in America last year were cash buyers.
Wow.
Which are usually, probably backed by financing one way or another.
Private equity.
I always thought that it was about 25 or 30%, which even that probably shocks a lot of people. But anywhere, this is a huge it's a huge cottage industry, right? It's very fragmented. It's a matter of finding those people, but there's a lot of deal volume happening that is not owner occupants.
Yeah, I don't know that stat, but you look at all these big institutions that have jumped in the market. You look at the BlackRocks of the world. You look at the Colony Capitals of the world that are these institutions that are just coming in and scooping up single family on an all cash basis.
Yeah.
So I'm not surprised that number is high.
Yeah, yeah. Now, do you provide financing for folks that want to keep houses as rentals as well? Or are you primarily just like bridge loans, shorter term financing?
So today we're primarily bridge loans and shorter term. We'll go out to 24 months today, but in the future it's possible. We're seeing some smaller community banks come back in that market where they're willing to do sort of this buy to rent model. We've kept durations fairly short. Our loan terms are usually 12 months or 24 months, but it's not inconceivable in the future that we introduce new loan products depending on demand. It depends on what do real estate investors want, what do real estate investors need, and we'll be looking to meet that demand.
Yeah, that's great. Well, can you talk a little bit about just the market in general and where you see things going? I mean, there's been a ton of investor activity.
Yeah.
Some would say that it's gotten a little overheated in a lot of markets, and the investors are. In fact, I know people, large buyers, even hedge funds, that have said we're not buying anymore right now. We're not buying in that state. Or we're not buying in that region of the country right now. Even the little guys have kind of gotten squeezed out in a lot of areas, but that's cyclical, right? So talk a little bit about where you think the investor part of the market is and where it's going to go over the next few years.
Yeah, so we're very cautious about this at the investment committee level, and I'll share a perfect example. I mean, multifamily, we're just tossing multifamily deals out. We've looked at billions and billions of dollars in private real estate transactions, and we're seeing multifamily be acquired for a 4, 5, 6% cap rate when historically, you would have acquired that at a 7, 8, 9% cap rate. So we're seeing a lot of cap rate compression. We're seeing people overpay for deals. Right. Substantially overpay for deals, and their internal valuations are off. The BPOs or the appraisals aren't actually matching what the internal valuations are. So we're very concerned about that. We have a saying that leverage cures all. So, you don't want to be over leveraged. We don't want to be over leveraged as a lender, but actually the borrower shouldn't want to be over leveraged either. Taking back a property or giving back a property is not an experience that anyone wants to go through. Right. And it can typically be cured with leverage. So, don't be greedy up front. Keep leverage at bay. But yeah, we're concerned about where the market is. I don't know that we're at the height of the market. I'll never be able to guess that or tell you that, but I don't think we're at the bottom. So it's a question of, are we in the middle? Are we in the upper three quarters? Are we at the top? But I think that if you keep leverage at bay, and if you're smart about where the market is trading and where the market is historically traded, you can use data to figure this stuff out. And we're big believers in using data in our underwriting in order to have some gauge of where the market is or may be going. But I think that we're not at the bottom of the market anymore.
Right. What is the so what's the hint? What prohibits you from growing faster? Is it? My guess is, I don't want to answer it for you, but it's finding deals, people finding deals to finance. You probably have access to more money than deals, is my guess. Is that right?
It depends. Really what's inhibiting our growth is ourselves. Credit quality is inhibiting our growth the most. We want to grow quickly but conservatively. So we want to grow quickly. We actually have access to a lot of borrowers. Yeah. The borrowers who have borrowed from us, I think we've got like a 70% repeat rate. So if you borrow from us one, you're 70% likely to borrow from us again because they love our process. It's so easy. It's so streamlined. They just come to us and say, this is amazing. So for those borrowers that do meet our credit criteria, they're not looking to be over leveraged. We're just a fantastic partner for them. But I'd say that it's really our desire to grow conservatively while still growing quickly is our biggest hindrance.
Yeah. And what do you do about folks that have more money to lend than you can apply? And it's always a challenge with raising money. Is I know for a fact personally I could raise far more money than I would ever need. And that doesn't do you any good because nobody's going to just stuff it in their mattress for you until you need it. So how do you deal with that?
It's a balance. And we have some lenders that want to come in and take out whole loans, right? And we're doing bigger loans right now. So we might have a $450,000 loan and they want to come in and take down the whole thing. So we try and, provide for an open marketplace. We do it on speed. So if those lenders are faster than other lenders, then we have no issue with that. I mean, this isn't high frequency trading. They have ample time to do due diligence. We typically use a pledge mode in advance of going live with a transaction. So they have the ability to do their due diligence in a pledge mode. They can pledge and give a non-binding intent of interest, but it's a balance. It's a happy balance with our lenders. But I think that because we are an open marketplace, because we are active in a lot of markets, we've been able to put a lot of supply on the marketplace, and lenders can actually, put their money to work at, call it 8 to 10%, depending on where they want to invest and what their risk tolerance is.
Yeah. And what happens for folks? I mean, there clearly is a market on those that are willing to lend to you as well. I mean, what if they're, what do you do? I mean, it wouldn't necessarily be a bad thing for you as a business if you had some private equity funds or some folks with some extremely deep pockets that come in and say, we'll lend to you guys because we like your process, or if you tweak your process, we'll lend to you at 4 or 5%, because their cost of money somehow is cheaper than that. I don't, that's a little difficult to understand. But I mean, there's some folks I know some very big players right now that are lending at ridiculously low rates because they can borrow it at much cheaper. And I mean, do you have institutional players, or can you foresee institutional players coming in to partner with somebody like you because you have a marketplace and saying, we will lend to you at a lower rate than probably what all your other prospective lenders will? And then what does that do to your business model? Because all those people that were relying on you to invest their capital have essentially got pushed out by an institutional player.
Right. I think there will definitely be institutional players in this market. We already have a lot of interest from institutions, and we're happy to take those conversations and figure it out. I think that the onus is on us as a business to manage that growth. Our lenders are the lifeblood. Our lenders and our borrowers are the lifeblood of the business. So, not only is that institutional lenders, it's also retail lenders or high net worth lenders, and we want them to be a part of our business. I'm a big believer in diversifying your sources of capital, no matter what business you're in. For us, that's diversifying our sources of capital across lenders. For borrowers, that may be, giving some of their allocation to a marketplace like ours, and we're keeping some of it with their local hard money lender or their local private lenders. I'm a big believer in diversifying sources of capital, but I do think there is a place for institutional investors. The onus is on a business like ours to make sure that the institutional investors don't just gobble up all the loans.
Right. And does that, if that scenario happened, would that bring down rates for folks you're lending to, or just increase your spreads at a marketplace like yours?
It totally depends. It depends on what that delta is. I think that at the same time, you've got risk and reward. I don't know that would just bring up our spread. I think it would probably bring down rates to borrowers. I mean, you're playing a supply and demand game. People should be compensated for that risk. If other people are valuing that risk as a lower risk, then it's going to bring down the prices of capital. So, we're really big believers in building an open and transparent marketplace. For us, that's about not being greedy, right? It's more important for me to build a bigger marketplace than it is for me to get an extra, point.
Right. Awesome. Well, talk a little bit about how both sides of the equation, folks that may want to lend through your marketplace and then those that may want to borrow, talk a little bit about how they would how they would learn more in the process they have to go through.
Yeah, so for both lenders, you start at RealtyMogul.com. If you're an investor or a lender, you'd go through our investor onboarding process. We're limited today to only accredited investors. So those are investors with over $1 million in net worth or an annual income of $200,000 or more. That's a regulatory limitation, unfortunately, but they would go through our onboarding process, and then they'd start being able to do due diligence on transactions. So you can, click through various loans, click through various investment opportunities, find an investment opportunity that's right for you. For our investors or our lenders, the entire transactional process is online. So you're signing your legal documents online, you're funding directly online, and then we have access to an investor dashboard, which gives you 24/7 access to really watch and monitor how your money is working for you. If you're on the borrower side, it starts at RealtyMogul.com. We have a borrower application for individuals who are looking for debt. You go through the borrower application. We'll start to collect relevant data and information from you. In the background, we'll be running all of our checks, background, criminal, credit, all that good stuff, pulling in property information, and then we'll present you with pricing. We're very upfront. We're very transparent about our pricing. We're very upfront and transparent about our process. Those borrowers will go through the process, and then we'll fund directly into escrow for that borrower.
Great. And I presume borrowers, if they want to use your platform, they're probably best to start doing that before they have a deal that needs funded. Is that accurate?
Yeah, we're open to that. If you want to get pre-approved as a borrower, fantastic, right? Let's get you pre-approved. Let's make sure that background, criminal, and credit check out, so you're not relying on us to close a deal when we haven't solved for that piece of it yet. Right. The beauty of it is that they can start and stop their applications, and we're very flexible for borrowers. But yeah, it makes sense to get in the system. Makes sense to provide us with some detail about what you're up to as a borrower, and then we can be a partner for you moving forward.
And does it have do you provide some sort of pre-approval letter for those that borrowers that need that in terms of maybe doing deal flow?
We haven't historically. Historically, most of the borrowers that we've worked with, have the ability to get transactions under contract, and then they share us as the funding source typically afterwards. But we're not opposed to it. I'm always looking for ways to improve the experience for borrowers. So if there is a certain category of borrower that needs that because of liquidity concerns, and credit checks out, and market checks out, and leverage checks out, we're not opposed to that.
Yeah, awesome. Well, it's an exciting space, and you guys are off to the races. So it'll be exciting to see where you go over the years to come. Like you said, a lot of folks I don't think are really investing in their platform. They're just milking whatever they can out of their own effort and taking advantage of a good market, or in some cases a bad market. But I think unless you build a platform like it sounds like you're doing there, it's hard to stand the test of time. So Jilliene, hey, thanks so much for your time today. Folks that want to learn more, they go to RealtyMogul.com, whether you're a borrower or a lender. And for those that aren't interested in either, definitely encourage you to keep an eye on what RealtyMogul is doing, because it's a very exciting space right now. So Jilliene, thanks so much for joining us today. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.